Let me now welcome on board N Kamakodi, the MD and CEO at City Union Bank, to talk about how their business is shaping up for the entire fiscal. Mr. Kamakodi, great to have you, on the show today. Despite being seasonally weak this year in the first quarter, you've managed to register about 10% growth after almost 6 quarters of lower growth. Now that most of the second quarter is behind us, what are the trends that you're noticing in terms of loan growth?
We feel like we are the growth momentum was picking up from the January 2024 onwards. We are able to take it from almost flat December to 10% for the June, and this momentum we are seeing is growing. We had a growth of annual growth of 14% in the previous year. We feel we should be inching back closer towards that, and probably for the fiscal, we hope we should be getting closer to the industry average growth.
Okay, fair enough. Better than industry average. So does that mean that the bank can consistently deliver double-digit loan growth this year?
Yes, we hope so. We are already into that zone, and going forward, the trend should be continuing and moving northward.
Okay. In a recent conversation, Mr. Kamakodi, you highlighted opportunities in the solar energy sector within MSMEs. Your bank has around 38% exposure to MSME segment and the loans. Could you tell us what trends are you seeing there?
Basically, as you are hearing from various quarters, the investment cycle, particularly in the MSME sector, was almost non-existent so far, and for the past few quarters, we are able to see the first level of trend where the people in the energy-intensive sectors in the MSME, particularly going for renewable energy sources, particularly solar. We saw a similar trend maybe like a decade back and all in windmill, particularly in the state of Tamil Nadu, which is having one of the highest contribution to the renewable energies. We are able to see a firm trend in the solar where investment per megawatt also started decreasing over the period of time, and we are seeing a very firm trend on that, which is helping the industries to save cost, particularly on the input front, and make them stay energy efficient.
Right. So many banks have also spoken about the stress in the MSME segment. Do you foresee any such sort of risk such as this in your portfolio?
No, in fact, we are currently going through one of the best asset quality period, in the sense that our overall SMA2 portfolio, even during the pre-COVID period, which used to be about 6 to 7% in the segment, and all are currently at about less than 3%. The incremental slippage ratio has fallen considerably, and we are seeing the trend, and also the recoveries have worked over and above the slippages for the past few quarters, and we hope the same trend will continue for a few more quarters.
Okay, fair enough. What about your deposit growth? Because that has always remained in high single digit. The CD ratio stands at about 85%. What is the outlook in terms of the loan growth, as in your view, given that regulators as well are rather vigilant about CD ratios?
We have, since our Tier 1 capital adequacy ratio is 20% plus, and we are sure the deposit growth will also match the required credit growth, and the credit growth should not get hampered by non-availability of deposit is what we foresee, and we should be in a position. And we have seen this type of challenges in the multiple cycles in the past, where the deposits and advances growth did not match, but they go in an alternate cycle, and we feel we should be able to have deposit growth matching the credit growth going forward.
Okay. Thank you for joining in. Good to have you on board, giving us a view on your financials as well as the growth outlook and potential for City Union Bank.
If you like this video, then like, share and subscribe to ET Now.